Take it away, Meta. What jumps out for you? Because right now we're looking at a stock that's up about 5% here in the aftermarket.
Yeah, I mean, it's pretty much all good news, especially if you believe in this AI vision that Mark Zuckerberg has. The Q4 holiday quarter sales were a beat. The Q1 projections were a beat. The real maybe surprising thing was just how high the capital expenditures are supposed to be in 2026. I think the estimate was around 111 billion. Meta's forecasting between 115 and 135 billion. But again, if you are a believer in this sort of AI world that we're living in right now, that's an exciting thing. I mean, this is a company that is going absolutely full steam ahead into AI. And, I think those numbers reflect that.
Not into the metaverse. We should note that Meta shares extend their gain to more than 5% right now. So there are a lot of people out there, Kurt, who are believing this story. It's not like this, though, every quarter. There have been quarters of late where Meta Platforms, I almost said Facebook, comes out and says, we're spending more money than you want us to spend. And then investors do not reward them for it. What is different this time?
Well, not just quarters of late. How about just last quarter, right?
Yeah.
This is exactly what we talked about in Q3. They didn't have these specific numbers, but they basically said, hey, our CapEx is going to increase meaningfully in 2026. The stock went down 14%. Everyone was very concerned with this added spending. And yet today, when the numbers come out and they're higher than estimates is presumably built in that commentary from last quarter, it doesn't seem to be as much of a problem. My guess is that they are seeing, this Q1 revenue, for example, which is going to come in $2, $3, $4 billion higher than expected. They're just seeing this ads business that is completely churning money out. And so if you feel that you have the money coming in, maybe you stomach those higher numbers than you would have expected.
Yeah, I mean, on the live blog, you guys, I think you put this out, Kurt, family daily active people, 3.58 billion, an increase of 7% year over year. And then the average price per ad increased by 6 to 9% year over year for the fourth quarter and full year 2025, respectively. So, I mean, this is showing that they're investing in AI. We're seeing it on the platform. We're seeing it in the ad dollars.
Yeah, I mean, my guess is that we're going to jump on this earnings call here in a minute or two, and you're going to hear the company talk a lot about how AI is impacting the ads business, because that's what they need to do to sell this right now, right? It's hard to say,
but are they right? But Kurt, is it? Like, are we seeing it in the numbers?
It is in part because you see that rise in average cost per ad. That's because people are getting more granular, more targeted. They're spending less to create some of this ad copy because AI can do it for them. There's a bunch of ways that AI can truly improve the ads business. You just don't, it's not as sexy, right? It's not as obvious maybe because a lot of it's happening incrementally behind the scenes. That is a story and a narrative that this company needs to sell, because if you're just simply saying, trust us for building a $50 billion data center in Louisiana and you'll see the returns of that in 7 years, that's a hard pitch. But if you say, hey, look, check it out, the ads business is growing quarter after quarter because of these ad improvements, these AI improvements we're making, that's the narrative that they're going to want to sell to people today.